College students in the current economy of high inflationary pressure and interest rates need funds more than ever. They often have to resort to freelance work and student jobs to help pay their expenses and piling loans. One solution to their woes is investing in stocks. Investing in stocks has its own benefits and risks, but it offers some added ease and challenges for college students. While the investment would help the students with paying their loans and expenses, they often lack the confidence to make well-informed decisions. When it comes to choosing stocks as a beginner or student, it's best to stick with large caps or blue chips. Such companies come with low volatility, usually pay dividends, and have more transparent and understandable business models than their counterparts. Here we have compiled the top 5 picks to invest in as a college student. Up first is one of America's largest telecommunications companies, AT&T Inc., trading under the ticker symbol T. Earlier this year, the telecom giant shifted its focus to telecom and cloud services, and spun off its entertainment assets through Warner Media, vastly improving its balance sheet. This stock comes with a number of interesting and solid reasons to buy it as a college student or even as a beginner. Firstly, the company has a long history of success and has been working since the late 1800s. It has continuously developed and offered new and innovative products to stay ahead of the competition and new trends. Secondly, AT&T seems to be well supported by the economy due to its robust relationships across many industries. And the ongoing upgrade of wireless communication to support 5G download speeds will definitely prove exponential for the telecom company. Not to forget, the company offers a dividend with an impressive yield of 5.86% as of November 2022. It has been raising its dividends continuously for the past 23 years. Moreover, AT&T is also working on a cost reduction strategy, and is on track to deliver $6 billion in cost savings for 2022. Despite the inflation, the company continues adding new customers at a steady rate, with revenue of $30 billion and EBITDA of $10.7 billion in the third quarter. Both figures were well above analyst expectations. In spite of being such an amazing stock, it is cheap at 7.44 times forward earnings estimates. Coming next is an American multinational pharmaceutical and biotechnology company, Pfizer Inc., which is represented by the ticker symbol PFE. Healthcare stocks in general are the best bets when it comes to beginner investments due to their evergreen demand, relatively low volatility, and dividends. This biotech giant has a dividend yield of 3.28% presently. Its annualized dividend growth was 2.56% over the past year, while consecutively increasing its dividend for 14 years. While Pfizer has enjoyed a great demand and profits uptick in the past 2 years, due to its COVID-19 portfolio, the COVID products have likely peaked and are expected to decline from here on. But that's not a concern for the company, as it had been a pharma giant and profitable, even before tipping its toes in the coronavirus pond. Also, it is aggressively working on expanding its pipeline, through an acquisition spree thanks to its vast revenue due to its COVID products. Its CEO expects the company to have 19 products over the next 18 months, with 5 already marketed. In the past 3 years, the biotech company has grown its earnings per share at a compound annual rate of 23%, while improving its EBIT margins. In the last quarterly financials, the net income was up by nearly 6%, and earnings per share improved to $1.54 from $1.45. The profit margin went up to 38% from 34%, and revenue was $22.6 billion. The quarterly revenue and earnings both exceeded analysts' expectations. Additionally, the stock trades at a forward price-to-earnings ratio of just 7.5, making it a great buy under $50 for college students. Before we move on to the next stock, we'd like you to know that we offer a morning newsletter to our email subscribers. Prior to the market opening, we send our subscribers an informative email about which stocks are moving or about to move. You will get an overview of key earnings reports, recent insider transactions, analyst upgrades, and downgrades. To take advantage of this offer, you can find the link in the description box. If you're still with us, it means you've liked our video. Do click on the like button to show your support. The next stock on our list is a durable consumer staple company well recognized across the globe, Coca-Cola Company. Trading under the ticker symbol KO, this beverage behemoth makes an excellent defensive core holding for any kind of investment portfolio. Claiming the title of Dividend King, it has raised its dividend for over 60 consecutive years. The stock has a current dividend yield of 2.9%, while maintaining its position as the safest bet in the market. Coca-Cola is Warren Buffett's largest and longest-held investments, due to many solid reasons including its strong financial profile, consistent growth despite market downturns, high dividend yield, and a higher return on equity. The company boasts a return on equity of a substantial 41%. Moreover, it converts 29% of its sales into free cash flow, and cash profits to fund its dividends, declaring its exceptional profitability. In the latest earnings report, the company posted earnings per share of 69 cents, on sales of $11.1 billion. Both the metrics improved year over year, and came above expectations with earnings expanding 14%, and revenue growing 10% year over year. For the full year, the company expects revenue growth between 14% and 15%, against the earlier 12% to 13% forecast. It also raised the full-year earnings per share guidance, from 5% to 6% up to between 6% and 7%. In short, Coca-Cola is undoubtedly a great stock at just around $60 to buy as a college student or beginner or any other for that matter. Following next is an American diversified energy company, Marathon Oil Corporation, which is known by the ticker symbol MRO. This oil and gas company is a direct descendant of Standard Oil Company. The stock is a strong buy due to its steady expansion, substantial and continued earnings growth, and strong cash flows on top of its dividend yield, which is expected to increase further. Shares of the company trade only at 6.3 times earnings, and it also offers a dividend yield of 1.12%. In the latest quarter, it increased its quarterly dividend base by 13%. Moreover, Marathon Oil anticipates raising its base dividend by 11%, after acquiring the Eagle Ford assets by the end of 2022. The company inked a deal for the purchase of the assets, with Ensign Natural Resources earlier in November. Furthermore, the company has grown its earnings by over 60% on average over the past 5 years. The latest quarterly report was no less impressive, with a massive jump of 344% in net income, resulting in earnings per share of $1.24 against the comparable 23 cents. Revenue surged by a nice 40% year over year, and its profit margin shot up to 41% against last year's 13%. Additionally, it has driven significant per share growth since October 2021, by executing share repurchases worth $3.4 billion. All in all, Marathon Oil is another great stock for college students to invest in, at a time when Wall Street is expecting the company's earnings to more than triple this year. This brings us to the final stock for today, which is a global leader in e-commerce and cloud computing, Amazon.com Incorporated. Trading under the ticker symbol AMZN, the company has had a little bumpy ride as of late, but its golden days are far from over. The inflation-powered economic downturn is not the end of e-commerce, nor is cloud computing going anywhere. On the contrary, the era of cloud computing is only starting. Despite the soaring inflation impacting consumer spending, Amazon's third-quarter sales growth was still impressive. Revenue surged by 15% to $127 billion, however, the quarterly operating income did take a hit. Setbacks like rising costs, increased wages, supply chain disruptions, and inflation are taking a toll on Amazon Web Services as well. But management isn't worried, as the e-commerce giant has been through it all. Amazon came back even stronger each time, to rank among the behemoths with a market cap above $1 trillion. The company is applying many cost-reducing initiatives, and redirecting resources to generate higher revenue. Moreover, the tech giant is also devising new strategies like scrapping its previous healthcare venture, Amazon Care, and introducing Amazon Clinic. Utilizing the resources from its acquisition of One Medical earlier in 2022, Amazon Clinic comes with a different model, connecting patients to third-party providers virtually with message-based service. Additionally, reports claim that it also plans to spend over $1 billion annually to produce movies for theaters. In simple words, Amazon is set to rule once again as the market conditions show any signs of improvement. That's all from us in this video. We hope that the insight we aspired to provide you have been of meaningful value to your investment portfolio as a college student. We would love to know your thoughts about our list in the comments section below. If you would like to know about other stocks and the best investment strategies for them, check out our website, stockstelegraph.com.